This video is going to be a little different. I'm going to go over my plan of improvement for my trading. And I also think this video could be a little beneficial for someone who is just starting out with trading and looking for some level of specificity or an example even of where they can start moving forward in their trading. And essentially, what I'm going to do is I have a bigger, longer document of procedures and things like that and trading plan and all that. But what I'm going to do is I'm going to boil down to just the mechanics of my system and have and build a checklist for that. And I guess the reason why is because you want to dig into any period of poor performance, which is what you're seeing here over the last month, really culminating in the last week or so. You want to dig into kind of the main reasons why it's occurring. It's usually one of three conditions: it's the trader, the process, or the market. And usually that process and market kind of overlap, and the trader is usually separate from that. So usually I would kind of put like market and procedure in one hand and the trader in the other. And one of those is going to be more significant than the other whenever it comes to poor performance. In my case, it's the trader. I have gone through about a month and a half of decreasing mental edge. In other words, I've been making more and more and more emotional decisions during a session, and that discretion that I once was able to use very well is now being clouded by a lot of poor emotional decision making. So my fix is going to be pulling back discretion to the point where I have almost none, and it's going to be more on the mechanics of my process and just executing that day in and day out without fail. For me, what the goal of this is not necessarily on P&L, although I do have a system right now with Edge. It's more about building a better mental framework around making decisions so that I can get back to a point where I can take on more risk and, I can continue to execute and move forward. So, what are we going to do? Overall, in general, I think as just guidelines for improvement, it's good to focus on one market, one trade, and, maybe even all in, all out type methodology. If you the point of improvement is trying to eliminate as many variables as possible so that you're making better, more consistent decisions. That's what improvement's all about, being more consistent, not necessarily about P&L. Because consistency can kind of breed a better habit and mindset so that you can adjust and get better and better and make an edge come out more and more. So I suggest one market, one trade type, and all in, all out. If you add scaling systems into this, it's one more set of variables you'll have to overcome to be consistent. So if you do have a scaling method, keep them very simple and something that you can execute every single day, almost to the tick. So for example, if you're using DVA as a scaling method, make it first obstacle, one tick before first obstacle, one tick before second obstacle, one tick before third obstacle, and just leave it at that, or however you do that. For me, it's all in, all out, and we're going to do one lot. And the market we're going to be trading in is actually the TN. I love this market. It's a great market. It's got good tick size, decent volatility for the bonds and treasuries, and it's a very very good market for historically for the one type of trade I'm going to focus on, which is fading. I'm not going to dive into narrative in this video, but essentially all these levels are my narrative levels, and they're volume-based profile things, and long-term VWAP things with Confluence, and they all they get colored as they become relevant during a session, kind of thing. So that part of the trading isn't necessary. That is mechanical for me. It always has been, and now we're going to put more mechanics into my execution and take away from some of that discretion. So this was a general checklist that I kind of came up with as I was going through my procedure and kind of boiling it down to just the mechanics of what I normally do. So it's going to be the TN market, mean reversion, time of day. I think is really really important um, for signals for a specific type of trade. If you're a fader or a mean reverter, you sometimes want to avoid the overnight or the opens because they tend to be a little bit more runny. Now that's in current market conditions. Maybe a year ago it was the exact opposite. So you have to kind of weigh that out with what's going on right now. For me, right now, going back about 2-3 months, I've basically come to the conclusion that a good mean reversion signal usually occurs anywhere from 10 a.m. to 12:30 on the TN. Now there is a small half an hour window where things can kind of get a little ambiguous whenever the ES opens, and the bonds tend to kind of albatross a little bit around that open. Now that's not always the case. I would say if you have 10 trading days, maybe 8 out of them, this first half hour will chop around or follow the albatrossing with the ES. So if the ES is going up, the bonds will be going down, and that's just like a general rule. After that 10 a.m., that correlation kind of starts to fade away, which is why I think the signal is a little bit better for the individual bond market to fade from after 10 a.m. You get a little bit more of a reliable, consistent, market-dependent signal. So setup criteria. First thing we're going to do is go to our setup chart. Our execution chart is a Renko chart. I could show you the data here. It's a 1-1-1, one tick trend, one open offset, one tick reversal. Very simple because this market doesn't tend to move in 25, 30 ticks at a clip. If you run something like gold, I've done the same type of thing that we're doing right here, and it's usually around 20 ticks to 10 ticks for these bars. And depending on the volatility, if it's super volatile, that's not even close. If it's kind of in a normal day, that 10 to 20 tick range is pretty good. But what this really does, it sets up just a simple pattern for entry methodology and price behavior. So before I jump into all the specifics, I want to just mention any of these numbers that I'm pulling out, they come from long periods of observation. I've been trading the bonds actively every day for about 6 months now, but also I've been watching them for about 2 years. So I've had a decent amount of experience with how they move and the way they move and things like that. I always love these markets. I just like the way they are. They're difficult to, I guess, really manipulate. They are very fundamental, so they do move considerably with news, but they are hard. It's like the ES, it's so thick and so many participants that it's very difficult for one person to dominate that area. And because of that, they tend to be a little bit more rotational. And whenever something is trying to be accomplished in the market, it tends to does it with a fairly normal auctioning process. And that's what I like about these bonds and all that stuff. Having watched them for 2 years or so, I have a good idea of their general ranges and their general like short-term rhythm, and that's what a lot of these numbers are based on. So for the TN, whenever I pull out some of these numbers, it's based on this kind of shorter-term back and forth. Generally, what I see on the TN in terms of noise is about 6 ticks. In other words, a 6-tick range of back and forth for noise, and then a decision is usually made in that market if something is being choppy at that time. And, that's pretty common to see. So that's what I base a lot of my criteria on for entry signals and stop sizing. So what you see here is time of day, 10 a.m. to 12:30. Then we have a chart based on the Renko bar. We need a narrative level interacted with, or price touches narrative levels, or a narrative level. Let's do that. Oh, sorry about that. So it touches a narrative level. And then from there, we interact with the 1.5 to 2 deviation on DVA. So we not only want a narrative-driven level like this black area here. Let me brighten this up a little bit or give it a color. We'll just make it green for now for purposes. With this green level here, we want it to be also in the colored band of DVA. So we have those two criteria kind of establishing the first setup. And now it comes around to like, how do we access the trade? What are we looking for whenever we get into these ranges? What we're looking for is this pattern here. We're going to look for a Renko reversal, which is 3 ticks from a low or a high extreme. And what it'll print for me is something like this, a solid line like that. And it'll print 1 bar in the opposite direction. So we want a Renko reversal pattern, which is 3 ticks from the low or the high. You don't need the Renkos to do this. You could do it with range bars too. Let me see. I have range bars here. These are set to 2 ranges, but if you put them on, you could see how this would work. It would come down and reverse 3 ticks, and that would give you a fresh bar, and then you could look for that pattern from there. So also another option. But you want that 3-tick reversal. And then the entry zone occurs 5 ticks from the extreme of that reversal. So this is the setup right here. Let me kind of highlight that with something. So this is the setup here. You'll see it meets all that criteria. It's in the zone, it's at a narrative level, and we reject from it, at least initially. Then we have a 5-tick range from that low down to the next extreme. So we're kind of reading the market as it goes, right? So at this point, if we get a reversal anywhere from down in here, it's an entry, which is what I kind of go over here in the entry zone with the entry criteria. The one thing I will say is for my particular edge, we'll talk about this more with risk reward, and we'll talk about this more with specifics. So we'll skip over this for a second. We'll go right into entry criteria. So the entry has to be in or at the entry zone. You need to see a reversal pattern, and the stop is 5 ticks below the entry. And that's really just due to noise. So as we come down in the market, no reversal. Now this is our first reversal here, and this is our entry right here at 60s. So what we would set up there is an entry. Whoop. Sorry about this. Entry here, and then we will take a stop 5 ticks below. So this is 3 and 1 and 2. So somewhere like that. And that would be your range. And what you're looking to do now is eliminate discretion. So we have a mechanical system. We establish our narrative levels, then we have a DVA reference that we need to use, then we have the mechanical setup, and then the mechanical entry with the mechanical stop. The last thing we really need to talk about is exits in management. For this particular situation, I've basically created a fixed R target of 2R. So you'll notice I'm not using DVA as a means of, well, actually I kind of am. Roughly 2R is about 10 ticks in this scenario because I have a 5-tick stop. Usually that occurs somewhere around VWAP. And this is really just based on rhythm. So all of these numbers are based on rhythm. In this scale, the first leg of momentum in your favor usually is anywhere from 8, well, I guess 10 ticks to like 14 ticks from the low of a move. So these moves tend to be anywhere from 10 to 14 in the shorter term whenever there's not some higher time frame thing going on or something pushing these markets outside of that extreme. So in normal short-term rhythm, that's usually what you see. So our fixed R target is within that short-term rhythm scale out. And that's important that everything in this mechanical process is kind of based on our values and having a good risk reward in our favor and making sense with what we should see in the market. So we have about a 5 to 6 tick range of noise. Would I love a 6-tick stop or a 7-tick stop? Absolutely, I would. But then my risk reward on my first scale would be less than 2R, making my hit rate need to be a lot higher. So it's kind of like this balancing act between all these different variables that I'm doing, and I've settled in on a little bit shorter stop with a more conservative entry model, which is what you're seeing here that I'm laying out. And that also gives me a shorter target that makes more sense with a first scale in a winning position. And that's it. So now we're up to this point. We have an idea of our stop, our entry, and all that stuff. Our management, no movement of any kind of stop or target. Target is fixed, stop is fixed, so we don't have to touch anything. Once again, I'm eliminating discretion. So I don't want to have any more than just a mechanical open trade at this point. I can change that. Eventually, if we get like halfway to the distance, you move to break even or scratch or something. Yeah, sure, I can do that. But let's see how the edge performs first. Exit criteria, like I said, fixed R target of 2R. And this is just to keep my decision-making consistent. That's what it's about. It's not about necessarily making a ton of money. It's about being very consistent right now. Okay. So in this scenario here, we would look for about 10 ticks above this, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10-ish is like right here at 60s. Yeah. So we run that up, and that would have been a nice 10-tick scale there based on what we're seeing. So now what I'm going to do is I'm just going to walk through the week and take a look at this methodology and how it would have performed, and then I'll wrap it up. Okay, so we get to 10 o'clock. We have no signals because we're at a narrative level, but not an extreme. We get out to the extreme here, and we get our first signal right here. This is the setup, right? Why? Because it interacts with both the price and the DVA. So we get our setup, and now this is the entry area. We get our first entry here where it comes and touches that entry area and reverses. So we get our first entry at 07. Now 07 down to 02 is our target. That would be a nice move down to another narrative level and also confluent with VWAP. Makes a lot of sense here for a good scale. What happens? You get a stop. So we're down 1R right now on the session. Keep moving on throughout the day. We get another signal right here at the 15. See how we're at the narrative level or outside or interacting with that DVA. We get our first setup bar, which establishes the extreme, and then we come back to that and we get an entry at 14s. 14s, target down to 9s. We get our first attempt at it, doesn't really work out, comes back to around entry, and then continues on, comes one tick below. And this is kind of one of those things where you need to be vigilant about, like, is this okay? Can I take this a tick before? In my method right now, no. Let it play out, and it ends up going for our target. So we have 1R worth of profit on that day. Come down in, same exact thing. We're looking at 10 a.m. start. 10 a.m. gives us a signal right off the bat. We're at a narrative level outside the DVA. We get our first entry criteria. Entries here. 10 ticks up is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So this goes 11. So we would have been out here one tick before that high. You can see what I mean by I've based this on rhythm that I've observed over long periods of time. So this isn't by mistake. Now, whenever it comes to risk rules for myself, there's a little note here. Entry zones can only have 2 signals. In other words, I can only take 2 trades for any one entry zone. If a win occurs for that zone becomes void and I don't need to trade it anymore until a new one is established. If 2 losses occur in that zone, it's also void, so I don't need to trade it any further. The total R value I'd be willing to risk on a day is probably 4R. So that'd be 2 zones that just completely don't work. Okay, so first zone works out, and it's now void. We wait for the next part of the day. This actually was an area, a narrative area that I was watching very closely. It's only a line, but this was the specific criteria I was looking for. We set up right here. We get our first entry here, and we never void that entry, and it goes right to target. So we have a 4R win here today. We have a 1R win here, so that's 5R up. And we're going to continue on here. And now we get into a place where discretion, or a scenario where we need to establish some rules. Oh, no, we're not there yet. What is this? Oh, this is all overnight. Now we're at that level. So we're at that level. We're interacting with that level. DVA's there. It's 10 o'clock. We get our first entry area, and we enter here, and we basically have to sit through almost an hour of back and forth. Probably getting close, coming back, getting close, coming back. Then we finally get our release. It's up for 2R, and we're done with that entry zone. So I think that's all. Yeah, that's the only trade opportunity of that session. So now what? We're up 7R? Yeah, because it was 1R, then 4R, which is 5R, 7R. We're up 7R right now in this week. Comes back down, and now we get into that zone of discretion where essentially at the time I didn't have these blue lines because they weren't established yet. They were established on this day. And what ended up happening was I had to get rid of one of my entry setup criteria, which is that narrative level, that it interacts with price touches that narrative level. And, this was a call you have to make in the system whenever you don't have all the setup criteria because your narrative literally runs out in terms of recent references. There's 2 things you could do here. You could just not trade because you're already up 7R during the week, and that's a pretty good R value to be okay with. Or you can kind of do what I did and take scalp-based criteria where maybe you're not holding for the whole thing or whatever. So first setup is right here. We get our DVA extreme pushed, and we get our interaction in the level, and we now have an entry criteria. We get a 2R win there, and then from there, this area is void, so we really don't take any other entry unless we get below it. So once we get below it, we have new entry criteria, which can establish itself there. And this is kind of one of those things where is this another entry area? Yeah, it is. But we run out of time in the session from around here to there, so no point in even really discussing this scenario. And next is this day where I did have 2 narrative levels that I was working with. And I was looking at entry criteria here. You can see this is a little bit more of a tricky day. First entry off of the 927 area, it's just not worth it. This was what I was doing on this day. So if I was going to adjust my process for what I've laid out here, what we're going to see is once 10 o'clock hits, we get our first setup area here. And then what happens? We get no entry signal whatsoever, no entry pattern. That pattern has to occur within that 5 tick area. Once it goes outside of that and occurs, we're no longer in that zone. We're establishing a new zone. Same thing happens again here. Usually, whenever you get a pullback or something like this, what you're looking for is this to come up and then this to come back down to the here before releasing. So this was just a setup that just didn't occur. It just didn't work. We would have passed on this trade and missed it. Because once you extend beyond one leg of rhythm, you're now out of, so this pullback here was 10 ticks. You're out of rhythm with the market in terms of how many times you could take that signal. So the next time it comes through, we don't get an entry signal anyway. And then we establish our last place of the session. We have an entry here. Let me move these over so we can see it. We have an entry here. And then after that, it becomes void because this goes exactly 10 ticks right to the high. And then we're done. Now, the question is, like, do you take this second one over here? No, because the first entry criteria is void. What you would do or possibly do is set up a new entry area like this and then wait for what was going to happen here. Now, I know that obviously this can use a little tweaking, and maybe with some time and a little bit more discretion, I could take a second entry somewhere around here if for whatever reason there was a strong reason to be long in this section, sure. But for now, this is the mechanical system that we would have come out with, and we would have had a very productive week. By my count, we ended before we had any narrative levels up 7R, and we added 2R to it, and then 4R. So we ended up about 11R using exactly what I've laid out here. Now, this is not built and retrofitted to this week. It wasn't done that way. This is what I've generally been using for fading. It's just I've gotten outside of this and I've been using more discretion in terms of time of day, in terms of, entry patterns and all kinds of stuff. And I'm putting myself in difficult situations in terms of risk reward. So what this really is the most conservative, more straightforward way for me to trade my process. And that's the ultimate goal. So hopefully this was helpful going through all of this information and taking a look at how a mechanical system can perform even in a market condition that is almost exactly opposite to what you're looking for. Now, honestly, like if you go back into more rotational times, like look at how nice these trades can be in more rotational environments where, let me pull this up here a little bit, where you can actually get, 10 o'clock comes in, then you get these nice rotational back and forth type of plays during a session where the opening, doesn't drive all day and things like that. So, like I said, hopefully this is a little bit of an eye opener. It's also kind of a big journal entry for me moving forward, and I've now established some hard, fast rules that I can now score myself on. Essentially, out of how many bullet points are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So I could probably narrow this down somewhere to 10 and just evaluate it on that. And then get a score out of a hard 10 of like mechanically, what did you do? And here's your score. And then it'd be that simple. So, yeah, that's all.